Investment Strategy is Morgan's flagship research publication. It steps through our top-down macro views and how these shape our asset allocation settings. We look at key investing themes. We also provide detailed views across the asset classes all the way through to equity subsectors and best ideas. Our economist Michael Knox has strong views in this area. The US economy is already in healthy shape, which we think will drive the normalisation of interest rates faster than the market currently expects. This has major implications for our equity strategy, which we discuss in this quarter's report. Now, Trump's economic reforms are clearly pro-growth, which is good for the global economy if executed, but we just fear that equity markets are pricing in this growth a touch too early and despite the risks to its execution. We show that US stocks are trading at valuations which aren't justified by their earnings until the latter half of next year. So with US stocks looking expensive and Australian stocks looking slightly expensive, we just think that equity markets look vulnerable to any hiccups in the execution of Trump's agenda or to obvious geopolitical risks elsewhere. Aside from holding higher levels of cash, we're advocating that investors gradually shift their portfolio exposure, allocating slightly less capital to defensives and slightly more to cyclicals as rates normalise and the global economy gains some momentum. This includes lifting exposure to mining and energy stocks and also to cyclical industrials which are steadily recovering off their lows. We remain steadfast in our aim to protect investor capital through such a tricky environment. That said, we're pleased to be able to demonstrate strong gains for investors in stocks which we think can still thrive regardless of the interest rate or political environment. These opportunities, though, are often outside the household names among the top 20 or so ASX listed stocks. So second tier names like Challenger Group, Aurora, Corporate Travel, these are the stocks that have delivered stunning gains for our clients in the last 12 months. So we're continually scouring the market for these opportunities and are conscious that buying on volatility or when markets are fearful is often the most lucrative strategy in difficult markets.